Alrighty, traders. Hello, hello, hello. Just thought I'd come on today and do some more. Today we're going to be just focusing on. Oh man, my voice is just gone. Today, guys, I'm just going to be focusing on the. I'll be focused. Let me just. I'm going to be focusing on. I'm going to be teaching you guys just some strategies to use when you are trading the markets. And also I'm just going to be focusing on just some things you can use when reading the charts, reading the markets, understanding the markets. We'll be going over some stocks overview, eh? How about that? How about I gotta change that. Some Q&A and all that sort of stuff as well too. So I'll be going over that as well too. So before we do start, guys, the first thing I do want to cover. Oh, by the way, guys, make sure you grab that johnsfreegift.com. As soon as you go over there, you can get instant access to that course. The very first video you actually get is actually my actual strategy that I use myself when trading the markets. Hi, the great immortal. So yeah, so the strategy I actually use in the markets itself. So, and so let's actually do this here. So one thing I want to cover. First thing I want to cover is just a bit of a broad analysis, a broad view on what I'm seeing happening right now in the markets. There's two really key things I'm seeing right now that we need to keep in mind. Okay, we need to keep in mind. This is broad view analysis, big picture analysis. Two big things that I see happening right now, guys, that could potentially throw off what most people think is going to happen is probably not going to happen, right? Because think about this for a minute. I'm talking about the actual stock market itself. This is the S&P 500, right? So I'm talking about the S&P 500 or even the Dow, stuff like that. And what I'm talking about is this: is that sometimes, or no, a lot of the times, if there's so much bias towards something out there, right? If there's so much consensus about something happening in the markets itself, let's actually do this here. Let me change this. I want to change this here. Let me change this. One thing I'm just renaming. Let's just have a. So let me go back to the live stream. Okay, so one thing that I want to talk about here, guys, is just about that, about the consensus. Again, this is broad picture analysis, and it's just something to think about. Okay. Hey, Suresh. It's just something to think about when looking at the markets and when trading these markets. Okay. So this is broad picture analysis here. So the first thing I want to say is that there's been so much consensus. There's been so much consensus around the actual market. Two things: recession coming, and also market crash. Right? There's been two consensus around that in the markets there, right? And so if you think about this for a minute, if there's so much bias towards one way, if there's so many people negative in the actual stock market itself, that the market is going to continue going down, the market's going to crash, right? And also, if there's a consensus of that we're going to go into deep recession, it's going to be all over, then maybe, just maybe, that the contrarian, because as you know, the market does, if most people are one way in the markets, the market does the exact opposite. That's what the market does. And so, again, guys, I'm not saying this is going to happen, right? But just think about that for a minute. Maybe us looking for more downside. Now, obviously, the charts would tell us when that happens. But maybe, just maybe, that if the stock market does do the opposite to what most people do, then most people are still thinking the market's going to go down a lot and then we're going to go through a recession. Now, I do believe we're going to go through a recession, but maybe on the interim, the market is not going to go down initially. Maybe 2024 was going to be that crash and also recession year. Maybe that's the year, but then maybe on the interim, we're going to get a rally because so many people are expecting the recession, the crash, the stock market down, right? And so it's just an observation that I've been thinking about. They're like, hang on a minute. Most people are thinking this way when it comes to the actual stock market. So maybe people that are so swayed one way when it comes to this market going down, maybe we're wrong. Maybe the market is not going to go down initially. Maybe initially it's going to surprise everyone and it's going to go through a rally. Now, I do believe we're going to go into a recession and we're going to see a really big pullback in the markets. But once again, maybe we're wrong through there. Okay, so that's the first thing I want to sort of observe from a big picture analysis from here. Maybe this year or maybe for the next couple of months, 3 to 6 months, maybe this year we go through a big rally, and then 2024 we start to see that as well too, right? Because if you have a look at if you go have a look at, this was very similar to, there's a lot of this sort of stuff happening. I'm looking at the weekly chart now. Look at this back here. This was actually back in 07, right? So the 07 period, what actually happened? So 07 period, we actually had a high to low. We actually had a 6% drop there. Then this high to low here, as you can see, we had a 12% drop, and then the market started to roll over from there. COVID lows are happening on Monday. Yep, that's gonna happen. So maybe just maybe we are going through some of these periods through here. Maybe we're going to see that. And if we go back to here, maybe, because the market is actually in a slight upward trend, guys, right? If we're actually looking at purely technical analysis from here, the market is making a low, a higher low, and now another slight higher low. So we actually are right now slightly in a slight upward trend. So the buyers are starting to show their hand. So once again, maybe, just maybe, this whole stock market crash and the recession, I believe is coming, but maybe it's coming a bit later than when we actually initially thought about that. So that's the first observation that I want you to think about. Okay, it's just an observation, and as you know, that if so many people are swayed one way in the markets, then maybe the opposite is going to happen. But for me personally, guys, it doesn't, like, I'm just giving you an observation on what the overall consensus of the market is doing right now and what's actually happening in the markets. That's the overall consensus, right? What I'm going through and what I'm talking about when it comes down to my actual trading of the markets, I don't really care. Market go up, market go down. I don't really care, right? And the reason why I say that is because, like, if I have a really good bullish setup, I'm going to take it. If I have a really good bearish setup, I'm going to take it, right? With actually my actual trading system that I personally trade myself. Again, guys, johnfreegift.com, that very first video, you can actually get access to that from there. But that's the whole purpose, right? It's like when you actually, but the way that I actually trade myself is that I don't really care whether the market goes up or down. Go through a crash. Actually, I actually prefer if the market crashes, because then we get a lot of free falling in the stocks. And guess what? We generally get good breakaway bars, we get good setups, and then I actually make a lot of money. I love trading crashes, right? Because it's a phenomenal time. So I actually prefer to see a crash. But maybe on the interim, maybe on the interim, we are not going to see that. Maybe we're not, right? So it's just something. It's just something to really think about from there. Okay. Now, here's also another big observation that I do see happening, guys, that I think most people are going to be kicking themselves for not being part of. And that is the mining sector and gold and silver. Okay. I honestly, truly believe, and you probably heard me talk about this before, I honestly, truly believe that one of the greatest fortune moves are going to be in the mining sector and gold and silver. Now, initially, we're probably going to see a leg up, right? So if I look at the gold market here, initially, we're probably likely to see a leg up. Now I have a 3,000 target. Why do I have 3,000 target? Because it's a round number, right? Right. Market breaks 2,000, goes to that there. If you look at 1,000, so 1,000 there, as you can see, right? That's the 1,000 there. And as you can see, that 1,000 was almost at the low through there, right? So I actually have a 3,000 target here. I believe once gold breaks out, we're going to go absolutely just nuts and crazy, okay? I really do believe that. But then I believe we're going to see as the stock market goes through the big crash, and that's the reason why I say maybe it's not now. Maybe the crash is not going to happen now, because what happens is that gold booms first and then crashes with the markets, and then the second leg up is even bigger, right? So I'll explain what I mean here. Like if I go to gold, right? This is gold. If I go back to what actually happened back in the 08 crisis, look what happened here. And I believe this is something similar in gold is going to happen here. Right, so if I squeeze this up, let me just take a screenshot of that so I can bring this up on my good old Snagit. Right, look at this here. So from actually, I'll take a screenshot of the whole thing so we can see the dates and times and stuff like that as well. There we go. Okay, cool. Right, so we can see here, this point here was middle of 07 into 08. So maybe we're getting that right now. Remember what I said before about the actual stock market itself, right? Remember I said before, like maybe the stock market is going to see another rally because most people, the consensus is bearish. And then maybe gold's going to break out just like it did here, right? Sideways, big breakout. And then gold actually had what? Then gold actually had an overall big pullback. And then guess what happened? Then we went through an enormous rally. Make that green, right? Enormous rally. So when looking at the markets through here, maybe just maybe we are getting ready for this period through here in the markets. Okay, maybe just maybe we're getting that period through there in the markets, and we're going to see this for the next 6 to 12 months, or the next 3-6 months or so out of gold. And then as that happens, maybe the stock market does keep rising up to maybe create a double top or maybe a slight higher high, because most people are not expecting that, right? Most people are not actually expecting to see that happen in the markets. And so gold is probably going to do something similar. And then the market goes down, and then they're going to come out with an enormous amount of QE, probably down here somewhere, which is going to see a big move up. Now, I've always said that the biggest moves in the mining sector are probably going to come in the second half of this year, and that's going to come off the back of the next recession, the QE, and so on and so forth. So, but the thing is that I'm not going to wait for that time because I don't know what's going to happen, right? If I have a look at the gold chart now, as I look at it, what could happen, and this is the reason why I'm like, well, why don't we wait for 2025 then, and then we actually do it? Because what can happen is this, right? We just say, for example, we actually do get that, right? Let's do another screenshot here for a minute, right? Let's just say we do get this, all right? So if we do get a big breakout here, I believe we're going to see an enormous, it's just going to be private clients of mine, okay? Private clients of mine. If you guys know exactly what to look for in a good quality setup, right? If this sets up for and meets our rules, get ready for it, okay? Because it could be one of the greatest trades I've taken this year, and we could be seeing potentially 500 to 1,000% return with that particular trade. So private clients, get ready for it. It's there, right? But make sure you stick to the rules and stick to the setup there. For you guys that don't even know what the setup is, again, I teach that in the free trading course. And again, if you actually want to get my help more, then you can get more information about that over there as well. But we may get that, and then in the crash, we may only get something like a 50% retracement, right? And then a continuation of this trend line coming up through there. We may only get that, and then suddenly the next part of the end of 2024 is going to see a supersonic boom. So by the end of this decade, when things really do fall apart, that because we know there's going to be a dollar crisis, we know there's going to be a debt default, so on and so forth, et cetera, et cetera, et cetera. I don't believe that's now. I do not believe that that's where we are right now in the markets. I believe there's a lot more to come. I believe there's going to be another big QE that's going to come around, and there's going to be a big shift from there. And so, guys, there is a time for this decade. But if you come back in 2020, 2030, there's positions that we can do to make sure we benefit from that next reflation. Right, from that next reflation in the markets from there. So, but for now, for me personally, is that I'm in gold. I'm in the mining sector, and I'm enjoying where we are right now. Like I've said before, that if I actually look at my baby in a sense has been the GDXJ. I'm not a very big mining stock picker because I don't know which stocks are going to do really well, which stocks not going to do really well. But but I'm pretty sure the average of the mining sector is going to do really well. So that's the reason why I'm a very big investor into, say, the GDXJ. Right. I do actually have one mining stock, and I'm probably looking I might actually do maybe a couple of more mining stocks in there as well, just to add to my portfolio. But once again, guys, I do see that, again, my break-even level, because I've been accumulating now for many years, my break-even level is that pink line there around the $30 level for the GDXJ for me personally. We are getting a little pullback here right now, guys, but I do just see, once again, a little pullback before we see this big breakout here. So, guys, they are the two different consensus I'm thinking about right now. I'm thinking, hang on a minute, and I'm trying to put the pieces together of what's actually going on right now, right? So the first one is the stock market. So many people are bearish. The consensus is recession. The consensus is crash. So that's the consensus. But what if the consensus is right, but they're too early? And on the back of that, gold really hasn't broken out and gone for a big move yet, like it did back in 07, 08. So maybe the gold market is going to rally first for the next 3 to 6 months, have a big move up, it's going to be the precursor to tell us that the recession is coming. And then maybe the recession comes next year where everything gets that pullback. And then on the other side, the big reflation comes, and just an enormous amount of money is going to be made from that. Enormous amount of money is going to be made. If you are educated and you know what to look for, right? And that's where I say private clients of mine, right? Private clients of mine, please make sure you're sticking to the rules. Make sure you're going through the workbook menu and the checklist and the trade examples, and and even turning up to the live room as well too, right? Just make sure you're doing it every day, because when the opportunities come, my goodness, they're gonna really, really come. So they're the two big things, and obviously I do see the mining sector being an incredible boom as well. It just requires patience, guys, okay? It just requires patience. This is not what I'm talking about here, guys. When it comes to the gold and silver and the mining sector and so on and so forth, this is not jump in and jump out. No, right? This is not jump in and jump out. It is, I'm going to position myself for the ride and think about that position. Like, I have an account called the 2030 account. It's called the 2030 account. What is that? That means by 2030, if I look back, I'm like, what would have happened? And now I'm looking back, I'm like, what would have happened from now through the end of 2030? What are the big cycles that are likely to happen so I can capitalize on that? The few things that I do see happening, the first one is that we're going, over the next couple of years, we're going to go through another recession. The interest rates are going to get slammed back to the ground, and that's therefore we should see markets like TLT and TMF, these markets start to have a nice rise. Maybe not now, maybe next year we actually start to see that big rise in the markets. Right? So that's the first thing that's likely to happen. Well, it's just a cycle thing, right? We know the recession is coming. When that happens, drop the interest rates, QE, bring down long-term interest rates to try to get things going again, right? We know that's going to happen. So if that's going to happen, we also can benefit from that. But again, it's a buy and hold. We're not trying to, but if it goes down 5% tomorrow, it's like, we're not doing that, right? It's like, we're just capitalizing on what's coming over the next 2 years. That's that one there. Over the next, and then obviously now through to the end of the decade, what's going to happen? Gold's probably going to break out first. Then that's probably going to lead also a lot of the mining stocks up as well too. So mining stocks are probably going to go through another big move soon. And then what's going to happen? Then we're going to go through another recession, and the stock market's going to come down even harder this time. And then the recession is going to be really big. They're going to come out with a package of QE, a package of QE that's probably going to be in the space of 15 to 20 trillion. The reason why I say that is because the '08 was obviously what it was. Then every single QE is much bigger, much bigger, much bigger. So, the COVID situation was about 5 trillion or so. I think the '08 period was about 1 trillion at the time, 1 to 2 trillion. So you do 1 to 2 trillion, then 5 to 7 trillion. And then now you just times that by 5, you've got 15 to 20 trillion. So if what actually happened back in COVID, when they do that, if what happened back in COVID, guess what's going to happen this time now, right? And that's what we're going to see. And that's where guys like, out of all the sectors, I see a supersonic boom coming in the mining sector. Only because, guys, we haven't had an incredible boom yet for the last 10 years in the mining sector. So it's due. So I believe that's going to be the gold and the mining sector is going to be the ones that's going to really, really, really outpace everything in the markets through there. And so it's just position yourself for that. So get ready for that, guys. Let me answer some questions here that I got. Ozzy and you're going up soon. EOSE. It's a very big. I don't know. It's a very big guessing game with this one here. Look at this one here, right? So this is actually the energy sector. And this is the reason why, guys, the energy has actually done quite well over the last few years. But some stocks in the energy sector, right, haven't done well. And that's the reason why, guys, for me personally, I'm a very big investor in the GDXJ, not individual mining stocks, because it's like, I don't know which ones are going to do really well. So I'm not sure about that one. CDZI. Again, there's actually no one really in control here. Like, there's just a very sideways movement. So I'm not really sure about that one there. Again, it's because there's no, like, just very big, very, very, very big sideways movement from here. Yeah, not really much going on there to really give me any indication from that there. And the other one was... How low will gold and silver go? Okay, so you're probably talking in the actual crash through there. We're not sure, right? But they're probably going to have a pullback. But initially, I see a spike first, alerting the recession, and then probably seeing the overall what I've just talked about there for the last 20 minutes. How we know that so many are negative. If just look at things like put the core ratios and stuff like that, and also, Peter, if you actually go look at the actual consensus out there, and even like in YouTube, right, YouTube and the articles and so on and so forth, JP Morgan, just a lot of people out there. You just see the consensus. If you actually look at it, it's probably like 80-20. 80% of people are saying crash, it's going to get worse, blah, blah, blah. And then maybe 20% of people say. That's why I say the consensus out there. Hey, John, draw your trend line. If we break it, then go short. I don't see why you're doubting this market. I'm not doubting the market. I'm not doubting the market. Mike, I'm just saying I'm giving you an overall consensus, right? I'm not doubting the market. And by the way, no, you don't just go short when you break a trend line, Mike. That's the wrong thing to do. I go short when I have my proven setup that gives me over 90% success rate. That's when I go short the market, not because it just broke the trend line, so therefore let's go short. That's the wrong thing to do. I'm not going to put a big position in the markets when I just see a trend line breaking. I need to have my complete setup, and then I'm going to jump in and then potentially make a few 100% return, maybe more on it. Oh, John, that's ridiculous. Really? Well, we've had this year we've had a couple of really nice trades that's done like 2-3. Actually, there was a few months ago we had 2 trades that collectively did 500% return for us, for me and my private clients. So there are out there, and they are coming again soon. There are some nice setups happening right now. So that's what I prefer to do myself. But I'm not going to just go short just because it breaks the trend line. Gold having a couple and handle pattern. Let's have a look at that. This was a very, very, very big sort of talking pattern. Not maybe. Like if you're looking at the big picture there, like maybe, but nah, it's not there anymore. There was something, like if we actually looked at it before, there was a very big there's a very big sort of a very big talking point that we saw this as the cup, and then we had this as the handle through there. So that was the cup and handle, but then now it's just gone sideways through here. So that's actually obviously a big thing from there. David Hunter predicts melt up in the next 6 months. Yeah, he's been saying that for a while though, Peter. I don't know if he's right. I don't know if I'm going to be right or wrong. But I'm just trying to put the pieces together, but based on what gold does, what happens in the markets, and the consensus and so on and so forth out there. So, yeah, he may say it may be the next 6 months. It may not be. It's always very, very hard when it comes to that there. Gold to 3,000. Oh, gold. Is he saying gold to 3,000? Is he? Interesting. That's my number. Or I just use that number because it's a round number, not because it's anything special. Now the projection for this channel here, if you actually measure from the high to the low, and you project that up, you actually get about halfway. So around the 2,500 is probably the first initial target. Would probably be about that. Because that's the channel, that's the projected. If we do break out above 2,100, then we're probably likely to hit at least the first level, which is 2,500 from there. So, what's going on with what? I'm accumulating GDXJ and KWEB. KWEB. We looked at this before, didn't we? I'm not sure why you're doing KWEB for. Yeah, there's a lot of, I guess because you think the China market's going to do really well overall. I'm guessing that's the reason why. For me personally, I don't know much about the KWEP or the Chinese market, so I can't really say too much about that. But the mining sector, I definitely have the cycles and the history repeating itself and so on and so forth through everything that's happening through there. I have about 20% of my money in TLT now. Okay, cool. John, what do you think about BSX? I think that's the... Are you talking about this one here? Or are you talking about the actual exchange? I think you're talking about like a different market, aren't you? BSX. What is that? BSX. I think it's a... Oh, that's a hard one. Tank versus Garcia. Oh, it's going to be a good fight, though. It's going to be a good fight. I don't know. That's a hard one, isn't it? I think maybe Tank has it. I don't know if he really lands some big shots, but it's going to be a good fight. Let's go. Okay, so you're probably looking at. Let's have a look here. I'm just on my other. Oh, so it is this one here. It is this one here then. I guess that's, yeah, I guess you are. Yep, it is this one here. Okay, cool. So it's the one that I'm looking at right now. Okay, I'm just trying to, I think, was that a different exchange or things? But no, but yeah. So this one here, what do I think about it? Well, the thing is that we've done a lot of very big move up. So this market actually having a pullback now is not surprising, right? Because that's how the market works, right? The market goes for big move and then we go for pullback, big move. and now we're getting a big pullback through here. If we have a look at the weekly chart though, that the level was through there, sideways. So I think we may get it. We're probably going to get a big pullback out of this one here. Just looking at this level through here, somewhere probably through there is the next level, next major line level. So we're probably likely to get a really big strong pullback out of this level. Because I can't talk right now. We're probably going to get a big pullback because we've actually made a very big move up. So probably a big pullback out of this level here. What you want to see is this particular market stay above the $46 level. If we do get below $46 level, then this whole big move here was that last final hooray. If we get below 46, we're probably going to head back down towards the level through there, which is that 35 level. From that level through there. Can you have a look at JAG? This is a miner that I get dividends every 3 months. Sure, JAG. JAG. What is that? What is JAG? I can't actually. Is it JAG? Let me have a look on the Trading View platform. Stocks. It's actually probably JAG. Which one is that? Okay, so it's a mining stock. Yeah. All right, I'm looking at that right now. Oh, geez, this is it here. Massive downward trend. This thing's getting hammered. So as you can see, right, not all mining stocks are going to do really well. This is looking really weak, by the way. Really weak. We're actually in a strong downward trend right now. Look at this weekly chart. Yeah, this is very, very weak right now. We have this move down. We also have this move through there as well. As you can see, all this support is now becoming resistance and breaking down. So if we break these lows at 240, we're probably going to be heading back down towards these levels through that $1.80 level. So that's probably what's going on. You got in at 68 cents. And it might be back down there as well too. Because this is actually a very, very weak pattern. Very, very, very weak pattern, by the way. Very, 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 once again, just a very, very, very weak pattern through here. Because now look what we're getting now. Okay, look at this here from a chart perspective. Check this out. From a chart perspective. So if we have a look at the market, right? So we had what? We had these up, down, up, down, up, down, up. We're not really sure who's in control through here. Then now look at this here. Came down low, came back up low, and then now it's rolling over through here. So this is the very first time now we're getting a significant lower high. We're probably going to break that level. And if so, we're probably going to see a move down. Because now we've just been doing nothing for quite some time. Now we're starting to see a downward trend. So this particular mining stock is probably going to get hammered in the market. Bonds is the play. For the next couple of years, I agree. For the next couple of years. But you definitely don't want to be in bonds. Well, I can't say definitely, guys, because I can't tell you what to do. But it's probably not advisable to be in bonds after the recession comes, because then we're going to see a massive increase of inflation again. and then the interest rates are going to go absolutely just burko. So it might actually be a good time to short the bond market at that time. So yeah, that's what I do say about that. So we're probably going to get it again short term over the next 1 to 2 years. Interest rates coming down. QE is going to happen. The QE is going to create a much more bigger inflation spike that happened in COVID. When that happens, everything's going to get a big reflation, and then suddenly a year or two later, the inflation is going to get way out of control, and then towards the end of the decade, maybe 27, 28, 29, somewhere in there, we're going to see interest rates just get skyrocketed much higher than they did last year to calm down inflation. When that happens, interest rates are just going to skyrocket through the roof. So holding bonds at that time is probably not going to be a good idea. And then that's when the really bad recession happens, right? We're talking like the government defaults on their debt, all that sort of stuff, and then the New World Order comes into play, all that sort of stuff. But that's 2030, right? Or 2032, 2034, like it may be 2035. We just don't know. From there. Are you live every day, Saturday around this time? Juliet, not every Saturday. No, not every Saturday. It's just a time for me personally. I actually live in Australia myself, so right now it's 7:40 in the morning. I got up early this morning, and I just wanted to come on and do a live today and just help some people out. Guys, just give me 20 seconds, guys. Alright, traders, I'm back now. I'm back. Check out RTL. RTL, sure, let's have a look at RTL. RTL. What is your thesis? What is your view on this one here? Richard, when it comes to RTL. We're in a downward trend. Guys, don't be buying stuff when it's in a downward trend. Actually, no, that's not true. If you're a buy and holder for long term and don't really care what's going to happen over the short term, or maybe for the next 6 months or so, then that's okay. But guys, do not be buying things in a downtrend. Do not be trying to short things in an upward trend. Right? This thing's in a complete downward trend. Look at a big lower high, lower high, lower high, lower high, lower high. Look, even right now. It's bearish, and we're probably going to break this level through here, which is that level through there. So I definitely wouldn't want to be right. And this is where, guys, if you always, especially looking at that weekly trend, right? This is the weekly chart through here. You can see here high, significant lower high, significant lower high, high equal high. So it's a big downward trend. You never want to be trading against. Find whatever the trend is. If there's a strong trend in place, guys, do not be fighting against it. Right? We all know the trend is your friend until the end, right? So keep him your best friend. So and the end could be where, because there's a trend up, there's a trend down, and then there's no one in control, right? So there's a couple of different trends here that we can actually sort of focus on here when looking at the market. So you have an upward trend, higher highs and higher lows. The trend is your friend until the end. Lower highs and lower lows. So if we're getting that, we know that every time we get rallies in the markets, like rally here, a rally here, a rally here, there's a good chance it's going to then end with a drop in the market. So, and same thing there, right? Every time we get pullbacks, we're getting what? Pullback, pullback, pullback. The market makes a high low, then boom, right back up again. Boom, right back up again. And then there's no one in control, right? And the market does this on you. And then there's no one in control, right? Like that. So therefore, when no one's in control, there's no probability of it happening. If you try to do, oh, I'm going to go long here because it's going to break out, you're guessing and gambling. Oh, I'm going to go short here, you're guessing and you're gambling, right? For me personally, I want to make sure that there's someone in control. There's a good trend in place. And then I'm waiting for a pullback and then I'm going to jump in on it. Again, johnsfreegift.com, guys, you'll be able to see my trading course. The very first video you get, which is actually my trading system. I teach you it. You'll be able to see exactly why it's so high probability in the markets through there. But don't be going. And that's the same for Tesla, guys, right? So Tesla, if we have a look at Tesla, this is where I've been saying to people, even my private clients, like, look, we are in a complete downward trend through here. Complete downward trend. Right? Look at this here. High, lower high, lower high, lower high, and now we're making another lower high. The market is still in a downward trend, big downward trend. Right? And so people that have been saying, you know, I even know someone as well too, they're like, oh, but Tesla's going to go up, Tesla's going to go up. Now it may go up, right? But again, where's the trend down? So this move through here, and this is what Tesla does, right? Tesla does this, and I've explained this in the past as well too, but Tesla does this. They have big, strong rallies, and it's like, they sort of suck you in, right? Again, this is the weekly chart here. If I go back to the daily charts and show you what they look like on a daily chart, they have these big, strong swings in the markets, right? Very from there to there. Oh, the bottom's in, and then the market drops. Right? And then look what happened here. The same sort of thing. The bottom's in, and then it drops. So what we want to be doing is we want to be identifying where that trend is, and then the best time to be entering is waiting for the pullback and then try to jump in. Waiting for the pullback and try to jump in. That's the best time to be entering off that there. So yeah, that's what I see through there. Let's go have a look at here. John, if the breakout of Monster, sure, let's have a look at Monster. John, is Monster worth watching? Well, it depends on, this is what comes back down to Ruff's Jan. It comes back down to your system, right? Like what are you using for systems to get into these markets? Because if it's just like, well, I think this is going to be a good trade, so let's get into it. You're on the back foot already, right? We shouldn't be doing that. It's like, but what do your rules say? If you don't have any rules, then that's the reason why you're not doing well in the markets. But looking at Monster here, Monster's actually, this is weak as all, isn't it? If you have a look at this, look at the moving average as well. Yeah, this is really, really, really weak. So that whole level through there could be one big false breakout. Looking at through there. So if we just looking at Monster now on a short-term picture, if we break back below, say, get below 52 to 51, then we could probably possibly start to see a move back down to 49. In the markets there. So resistance here, support in the markets. RTL, check it out. I did check it out. It looks crap. It's in the downward trend. So that's what I do see through there. And then if 49 doesn't hold, then we're probably going to have a move back down towards the low 40s. So this is actually not a strong market right now. So that's what I just say this one here. But definitely it's definitely held up strong compared to the overall market. Monster definitely has, yeah. Let's have a look here. Do you see mega cap tech crashing from here? Apple, Google, Meta, Amazon, Microsoft. If what I talked about at the start of the session, which is maybe the consensus is already looking for a crash in the market, if that's the case, then probably not. Probably not. We may actually even see, which is obviously, remember guys, remember this thing. What's happening with the Nasdaq? We have just made what? A higher low and a higher high. We are now actually in an upward trend right now in the Nasdaq. So the tech stocks are actually in a bull market right now. As we speak right now, if we're going on what we see right now, we are in a very strong upward trend. So right now, as we speak, the market is the market is saying is up. All the markets need for the retail trader to get overwhelmingly bullish, and we will rally to the upside. No, Chris, wrong, my man. The market is a contrarian thing. You get all the retail traders thinking one way, then the market does the opposite way. It's not like, if that was the case, 90% of traders would actually make money, not lose money. Tesla price cuts an upgrade, already made a move. Do any of you use a paid version? No. DXY looking to break out of the pennant. Let's have a look at DXY, which is UUP. Let's have a look at this here. Right, so the dollar, I don't really see any pennant right now. Just see a nice up move and then a slight down move from here as well. I can go for a monster drink. Upside, oops, then downside. Yes, that's exactly right. So Chris, exactly what you said there, Chris. So with what you just said there about about the market, about the retail traders being bullish, that's the reason why I believe, Chris, we probably maybe even go for a move up. Yeah, we may even go for a move to the upside to get everyone like thinking, okay, well the bear market's over, we better go long now, and we're not going to get a crash, and maybe we're wrong about this sort of stuff, and then the market turns against them. That's why I'm saying right now there's a big consensus of the market going down, so we're probably going to rally. Then everyone's going to get bullish, and then we're going to drop. And people are going to go, what? What is that? Yeah. The only solid long being WWE, and I don't own it. Really? That's been the only solid long? Really? Have you seen the mining sector lately? Let's have a look at WWE. Oh wow, that's a bit of something, isn't it? Look at that. That's a bit of something. WWE on the move. So yeah, SPY just grinding on. Yep. Thank you for answering my question. No problem. What do you think about XBI? Let's have a look at XBI. XBI. Biotech. Okay, so looking at XBI on a technical way, on a technical sort of approach, is that if we hold here, let's bring on the moving average. We've actually just made a lower low and now we're rallying back up. So if we hold here and we break back down, then if we hold here and then we start to break, if we start to break back down like here, like that, then we're probably going to continue down from here because we're now in a downward trend. Lower low, this could be a lower high before we break down. Give your input on Perry? Sure, let's have a look at Perry. Let's start off with that weekly chart first. So Perry is definitely in a very, very big, strong, very strong upward trend. Okay, we're towards the end of this move. We're probably likely to see a really big pullback out of this now. Yep, double movement through there, the end of the move type thing. So looking at Perry, we'll be going up. So I wouldn't be too surprised to see now Perry have an overall pullback down towards these 30 levels here. Maybe even down the 34 level, but we're probably likely to get a very big pullback only because we've been stepping up for quite some time, and then the market eventually runs out of steam before we see that move there. Someone said that the only good long was WWE. Hey, you got Perry. You have Perry. Let's have a look here. Nasdaq at head and shoulders. Let's have a look at the Nasdaq. Nasdaq head and shoulder formation. Really? Maybe a leaning one, but not there yet. There's no real head and shoulder here on the Nasdaq. Not yet anyway. We've got this high. This could potentially be a right shoulder, potentially, and then this is a shoulder here. So but it's not. It's not even a head and shoulder formation because that's a double top right now. In the markets, let's have a look here. What else we got? UUP dead dog. Maybe we're gonna go through a rally soon because everyone thinks it's a dead dog. Fed meeting. They are tighten lending guidelines for down payments purchases required 40% instead. Really? 40% instead of 20%. It could be counted as a future rate hike, then a pause. Really? 40%. What was that thing about Biden that just came out with that whole, they're going to help the people who can't even put 20% down? That sounds like an oxymoron. The bank's going to do this, but the government's going to do this. What? So yeah. $80 to $110 fast WWE. Let's go back to WWE. Yeah, but again, guys, like you're looking at this here from that point of view. You never want to say, "Oh my goodness, I wish I jumped on that." It's always about guys like you never miss out on opportunities, right? Because that hindsight's 20/20, right? But you can get a really good foresight if you know what you're looking for really good high quality setups that you see so many times that say, okay, this setup here that I trade every day, this has the makings of being a big mover. You actually can see setups that when they do set up, you're like, this has the makings of being a big mover, so I'm going to get in now, and I've got the foresight to see that this is probably going to be a big mover. Again, that's exactly what me and my private clients did a few months ago. There was 2 trades that happened, and I said, guys, because I've seen this before, these setups have the potential of being big movers, and they were. They just a couple of 100% return on each. Just really, really, really nice trade. So just because you miss out on something, guys, that's not what trading's all about, right? If your system didn't say go long, then don't go long, right? It's a big thing that I think most people that I speak to on the phone, like they don't even really have any system. They're like, well, I'm just going to go long now because I think it's going to be a good idea. But there are setups out there, guys, that when you see them on the charts, that you're like, okay, this setup here has the potential of making big moves. But they don't come around that often, right? They don't come around that often. And again, you got to know exactly what it looks like and so on and so forth. How much more downside on JNUG and GDX before resumption of the upward trend? Let's have a look at JNUG. Ooh, the J-Nug. Oh, J-Nug. Oh, I wouldn't really be touching J-Nug. But I'll have a look at the GDXJ though. How much of a pullback? Let's have a look here. So I think on the GDX, we're probably likely to be stuck in this triangle pattern. So we may get a little bit more of a pullback and then maybe a sideways movement through here. Or we may even get that like a pullback. Looks like there's good support around that 30 level, maybe even a bit higher than that. Maybe the 30 to 31 level. So we may even get a big pullback to there before resuming. The Fibonacci level on that level there is from that level to that level there. So yeah, so a 50% retracement, which can actually happen, is around about that 32 level. So we may even get a drop down there. When that happens, or if that happens, then we're probably going to scoop up and we're going to start to see another leg up through there, which is going to be amazing because I do have some mining stocks that I'm looking at to trade. So if we do get that, I'm going to be picking up some absolute steals, and then the percentage of returns that I'm looking at making are just going to be insane. Especially because I'm looking at some options trades right now with especially one mining stock that I'm looking at, that if we do get that and I see that pattern forming out, more of a drop and then a pullback, that mining stock's going to drop. I'm going to script things up from cheap options, and then I'm going to absolutely just do really, really, really well for it. XPO 2 upgrades Friday long. XPO. Really? You say go long? I don't know about that. That's very, very, very risky going long here. This market's just gone crazy to the upside. So we have the moving average trending down. Now we have a big spike to the upside. So it may continue up, but these big moves here also actually have a really good chance of coming back down, having like a really big strong pullback from this level here. So I definitely wouldn't say long in the markets. On XPO. Perry in range near moving averages. We talked about Perry before, didn't we? Let's have a look at Perry now. Again, but yeah, as I said before, Perry has been already in a big move for quite some time now. So there's a really good chance that Perry is probably going to have a really good pullback to balance things out, and we're probably going to get a pullback down towards I'd say the 34 to the 30 level. That probably level through there. Where's the 32? Right there. Right, yeah. So around, I'd say the 30 to 32 level, and maybe even deeper from there. Where Perry, I just see him pull back from that there. I could be wrong though, guys, but obviously don't be doing a decision based on what I just said there. You do your own analysis, guys, and you make your own decision. I'm just telling you what I could be wrong, and this thing just keeps going up. Semis look like they are getting weaker. If they start rolling over, Nasdaq will follow. Maybe. I think if you want to focus on the Nasdaq, I think we should just focus on Nasdaq, right? So it's like, if the Nasdaq starts to roll over, then we should just keep focusing on what the Nasdaq's doing. Very, very, very simple. I think a big mistake a lot of traders make is they go, well, if this market over here is doing this, then this market over here should be doing this. It's like, just focus on the market. If it's the Nasdaq, just focus on the Nasdaq, right? If the Nasdaq does hold here and we do start to roll over and we do start to break this level through here like that, then, and especially that's that level through there, right? If we do end up getting something like that, and we get a little bar that obviously a break, wrong one, and we get something like this, right, coming down through there, but then guess what? That's what we should be focusing on Nasdaq, right? Do your analysis on the individual market, guys. Don't be saying, well, if the US dollar is going to crash, that means gold's going to go up. That means I'm going to go buy some gold mining stocks. What? You are way overcomplicating it. No. If we think the Nasdaq's going to go down, let's actually do analysis on the Nasdaq and just keep it that simple. What else do we have here? So for a short swing scalp, I'm watching a HMCY. HMCY. HYMC. My bad. HYMC. Someone's looked to go short, someone's looked to go long. So for a short swing scalp, I'm watching. Really? Okay. I hope you're using that based on rules and not just based, well, you think it's going to go down, so let me quickly get in and quickly get out. I hope you have some rules behind your entries that you use every day, all the time when you trade, not based on, well, yeah. Hide new CFO XPO. Okay, cool. So just because they hired a new CEO or CFO or whatever, and that's the news that came out, doesn't mean it's a good buy right now. Look at this here, guys. Look at this here. Look how far away we get from the moving average, right? See how far we get away from the moving average? From there to there, right? And then this is how far we are away from the moving average. Look how far we get away from the moving average. Look where we are now, right? We're that distance away from it. The market is saying, guys, we're way oversold right now. So don't be trying to chase something that's already making big moves. And you're thinking, oh, it's going to go crazy, right? No, be smart. Be smart. Do not be trying to chase something that's already made and like, what is that? It's already made like what, a 35% move, and then now you want to go long? Big mistake. What about SMH? SMH. Let's have a look at this here. Semiconductor. This semiconductor. Oh, semiconductor actually looks quite weak, doesn't it? Okay, so semiconductors that there, and we're looking at something like that through there as well. Okay, so semiconductor. If we break below 240, we're probably likely to see a free fall in the markets, and this is probably going to be some sort of a false breakout up here, up there. So the semiconductor right now could potentially be one false breakout, and then we start to see this thing head back down again. Yeah, it's definitely struggling right now. You can see that through there. Definitely struggling. Let's see. What else do we have here? QQQ in the middle of the range. Short SOXX. Let's have a look at SOXX. Okay, so you're short this market. Okay. FSM is a silver miner. Right, so FSM is a silver miner in Mexico. Mexico holds massive silver gold supplies in the ground. Shorting SVB was good at 300. FSM will be a buy soon. Maybe. You may be right with that there. But I wouldn't, Richard, I wouldn't be just buying this stock here because Mexico holds silver supplies in ground. So just because that's the fundamental reason doesn't mean the stock's going to go up from there. QQQ crack happens when BTC loses confidence. I wouldn't say that, Turbo. Maybe they don't have anything in common, and maybe the Nasdaq is just the Nasdaq. So, as I said before, my man, if you want to make analysis on the Nasdaq, do analysis on the Nasdaq. We can't say, well, if Bitcoin's going to do this, then the Nasdaq's going to do this. So then, therefore, I should go do this with a tech stock. Big mistake, guys. Big mistake. We don't have to complicate it. Like, don't complicate it, right? If you're focusing on one market, say the Nasdaq or the QQQ, do your analysis on that market, and then you come up with a conclusion of what that market's doing, not based off, well, if this market does this, and it's like, no, it's the wrong way to go about it. You're making it too complicated, guys. Way too complicated. Coin is dead. Coin. And Coinbase. Maybe. There's definitely nothing wrong with coin for the last 12 months or so, isn't there? Maybe. Do you have any idea on JPY USD technicals? Sure, let's have a look at it. JPY USD. Japanese Y USD. So, looking at the technicals of this, let's go weekly charts. You can see the reason why it's actually held here quite nicely. That level there, that level there. So on a technical level, if we break the 125, that could be really bad. Actually, probably more higher than that, eh? Probably that level through there. So yeah, so if we start to get below this sort of 125 level through here, then we're probably going to see another free fall in this currency. KMX long. KMX long. Really? I'm going to buy the bottom. Okay. Strong resistance where it is right now. Strong support. It may break up. May is the key word. We're still in a downward trend. No, not really. Actually, there's actually just a sideways movement. So there's no one really in control here. But that's what we're getting through there. JPY is a good indicator. Do you still think financials have another leg down? Well, K-Sun, if you actually listen to what I said, it's not that I'm saying it's going to have another leg down. I'm saying that if we do get a break below 31, then that's going to give me a bit more of an indicator that now we're starting that next leg down. I'm not saying it's definitely going to go down. We need this is work. If we do get something like this happening overall, something like that, then if we get something like that, then yes, then we should start to see another leg down there. But until we get that, we haven't got a good indication of it's going to go for another leg down. We want to see a break below 30 level first before we get any indication of that. It may not happen. It may not happen. Anyway, guys, that is it for me. Make sure you head on down to johnsfreegift.com to get that free trading course. Have a great day, everyone, and I will catch you next time. See you, traders.